Hi, everybody. It's good to be here. Thank you, Jason, and thanks to Woody and Mike Bartner and everyone that's organized this conference. It's a really important gathering, and I look forward to talking to you about this provocative subject, which many in the room can relate to as females. Let me start by saying that my first job my first real job when I was 14 was caddying for Wall Street bankers and traders in suburban New Jersey. Some of you know this story. And so I kind of had a front row seat in the mid-'80s to the development of the kind of Wall Street finance that we have today. This was before leveraged buyouts, before algorithmic computerized trading, before the internet. And so back then, as far as I could tell, there were some people on Wall Street that many of the firms were organized as partnerships, for example, and they were investing their own money instead of securitizing everything and using a gigantic amount of leverage. And it was fascinating to me, mostly though, because, well, first of all, this is on a golf course in suburban New Jersey, so there were no women there by definition on weekends because there were no women that were allowed to play golf on weekends. And what I got to hear, or what I didn't hear when I would ask these guys, what do you do? They couldn't explain it to me very well. Many of them could barely explain it to me at all. And yet these are the people who have the most wealth in the country, and in many ways the most power. And so that was confusing and jarring for me. My dad was a sheets and towels salesman, and I came from a long line of Quaker farmers and small business people outside Philadelphia. And so I was kind of trying to understand what was going on, and I wasn't able to do that real well. So that's where my fascination / obsession began. And since then, I've been trying to understand how does the financial system work, and how could we bring, as Woody says, bring money back down to earth. So this is Lakshmi, who's the goddess, Hindi goddess of wealth. And the reason I'm putting this image up there is because you'll notice that she is a woman, and you'll notice that she's not standing in front of Grecian columns that make up the facade of the New York Stock Exchange. She's standing in a forest, an intact forest, and I think that this is one of the key points I'd like to make, is that from my experience working with female investors, women investors, they tend to have more of a sense of the whole. They tend to be able to see more the interdependence of things. And they tend to be, right now, questioning things in such a way that it's going to quite a bit deeper level than most, let's say, of the men that I encounter. And Judy Wicks, who you hear from next, has talked to me for years about how it's not just men and women. Each of us, wholeness is made up of each of us having a masculine and feminine aspect of ourselves. And so I subscribe to that, but I'll keep going. Trying to be provocative here with how it's going so far. So this is Lakshmi, and that's the main thesis I'd like for you to I'm going to try and test out with you. So here we have a quote from former Treasury Secretary Timothy Geithner, who said, "Most financial crises are caused by a mix of stupidity, greed, and recklessness, and you can't legislate away stupidity, greed, and recklessness." So to go along with, this was in reference to the most recent financial crisis, and to go along with this quote, I have a quiz for you. About half of the people who work on Wall Street are women. How many U.S. financial services companies in the United States are led by women? Any guesses? Close. Less than 3%. So again, one of my themes here is that until that becomes more into balance, I don't think we want all of, we're in the gender analysis here, we don't want all of one thing or another, but I would argue that having 97% of the U.S. financial services firms in the United States being led by men is part of the reason why we have what we have and why we're going to keep getting what we're getting. Yeah, thanks. And another thing that's interesting, just as a side note, because in my prep for the talk, I was reading another statistic, which is that Bloomberg last year did a study, and somewhere between that women earn somewhere between 55 and 62 cents of every dollar that men earn on Wall Street, which is another interesting quote. So here's where we get into some of the substance. The first study that I have come across in preparing for this is that there's growing evidence to suggest a connection between testosterone and risk-taking that leads to irrational exuberance. So this guy, John Coates, who's a former Wall Street trader, he studied what's called the winner effect, winner, W-I-N-N-E-R, and in athletes where those that who had succeeded, who were winning, would develop a sense of being invincible. And he's now been studying this as it correlates to financial transactions and our financial system, and is finding the same thing going on, which leads to the bubbles that we experience. Because I think the quote is, he said, traders get exuberant and investors get irrational when this winner effect is in place. And so again, if you put this together with the fact that the vast majority of those who are in power on Wall Street are men, it becomes an important thing to pay attention to. And I think all of us that have worked in finance have experienced this, what I call deal adrenaline, when you see a bunch of guys in a room doing a deal. And it's just something that we need to learn more about this if we're going to take things back in the right direction. The middle bullet I put in as kind of a fun. Who's seen Jim Cramer's Mad Money show on CNBC? Quite a few people. I highly recommend it to those that haven't seen it. It's first-rate entertainment. Here's a guy who's a former hedge fund manager who's up there basically doing play-by-play analysis of the stock market. It basically has the same lingo, the same locker room humor, the same affect, the same guest commentator style, and basically is treating the market like a sport or like a game. And I didn't get a chance to find this out, but I was curious in watching him the other night that I'd be curious how much of his audience are women. I would suspect that it's less than 5% or less than 2%. So there's just this pervasive theme in our culture to look at investing now that we have real-time information and people like Jim Cramer, to look at investing like a sport or a game. If we go back to the slide. And then the last one I want to talk about, I know Woody Tash is a big fan of the magazine called The Sun. And this month's edition has an article called Out of Our Heads by a man named Philip Shepard. And he and other scientists, Michael Gershon at Columbia University wrote a book called The Second Brain on this topic, suggested there's a web of neurons lining our guts that essentially functions like a second brain. And the thesis of several of these prominent scientists who are making this assertion, have done these studies over 20, 30 years. This goes back 100 years, these studies, actually. It's fascinating. I highly recommend the article. That women are in closer touch with this second brain than men are. And that they have kind of a gut feeling or gut instinct that is different than men have, and that is based on this holism and having a sense of the interdependence of things. And so I'm fascinated with how that relates to investing. So these are, you're probably familiar with some of these. I just distilled it down to, we know at RSF, I'll get to in a moment, that 2/3 of our investors at RSF are women, not by design. That's just the way the way it's happened. And what I've observed is that women are disciplined long-term planners, and that money is a means to an end as opposed to looking at it as a game or a sport like hunting. That women are more likely than men to stick with an investment strategy and take fewer risks. And here I want to clarify, take fewer risks, but what I see, and all of you who are in this room fit this category, there's a certain courageousness that I think women have right now and have for the past 30, 40 years in driving socially responsible investing to stand up for aligning their values with their money in ways that men have not. So when I say take fewer risks, that doesn't mean that there isn't a ton of courage there. And if you look at the nuns who basically started socially responsible investing in the 70s, if you look at the leaders of mutual fund companies like Joan Bavaria and Amy Dominy and Leslie Christian, who's here, these are the people who basically questioned the assumptions of our financial system and were able to start us down the path that we're on now. And this third bullet is there are no less than 20 studies showing that in the long term, women investors consistently outperform male investors. So this is, as I was sharing with you, part of my perspective is what I get to experience day to day at RSF, and I'm just so thankful to be able to witness the shift that's happening, where I think that what we've experienced is kind of social responsible investing 1.0 up till recently. Elena touched on this with screen mutual funds and shareholder advocacy, and looking at asset classes in a certain way, adhering to modern portfolio theory. And now, thanks to work like Leslie's, I urge you to download the white paper on our site, which is called The New Foundation for Portfolio Management, that Leslie wrote, which looks at things like ecological risk, which is absent in modern portfolio theory. It looks at things like growth. What if we don't grow as fast as everyone wants us to grow? What if we're not in the recovery that everyone wants, and we're in a new normal where things are going to grow more slowly? Then the notion of asset classes changes a lot, and it may not be the way to go for us to continue to use modern portfolio theory as our blueprint for all of our investing. So this is the world that I'm fortunate to live in, and with all of you, is in questioning a lot of the assumptions that we've had for many, many years that we may look back on this period right now as the period where we're able to develop a more advanced, a more nuanced sense of how we can invest. And to Tom's point, who was talking about Jane Jacobs, this is really the critical activity of this group and our work at RSF is to figure out how to do this in a prudent way to bring money back down to earth. But it's my belief that women are going to drive this change. And so what's next? It's true. I think we're seeing it already. And so over the next decade, women will control 2/3 of consumer investor wealth in the U.S. And there's the largest wealth, many of you know this, the largest wealth transfer in the history of the country is going on as we speak. And as Elena also mentioned, somewhere between 12 and 40 trillion that will change hands over the next 10, 15 years. And this is the opportunity. Going back to the Timothy Geithner quote, I'm thrilled that so many people are focused on policy change, and that's critical also. But I think for the long term, the key is going to be for people to have a shift of heart, a shift of consciousness, and literally not be able to wake up in the morning without investing with their values and really questioning the assumptions of our financial system. So thanks very much for having me.